Traders are suddenly ditching the crypto party. Is this the last call? This is Inside ETFs and we're talking about crypto. The tide is turning fast. Bitcoin ETFs are suffering their worst month on record, with more than $6 billion globally rushing out the door. And Bitcoin itself is barreling towards its sharpest monthly drop since 2022. Despite a year of policy progress and regulatory breakthroughs, investors seem to be remembering how painful the previous collapse was. So is the early year euphoria finally running out? Let's ask Dan Weiskopf, Senior Portfolio Manager at Tidal Financial Group. So Dan, what's really driving this investor retreat? Are we seeing retail stepping back, or is this mostly large institutions trimming exposure?
Investor retreat pause is the way I would call it. No, I think that as measured by Bitcoin particularly, listen, it's down 10% on the year. Everybody thinks Bitcoin should just go up to the right in a linear fashion. 10% pullback. Well, we started the year at 94, 97. We're down 10%. I look at that as a pause. And by the way, that's in the context of the SPY and or the S&P 500 and the Q's up 15 and 18%, but blocks up 35%. Listen, blockchain isn't just Bitcoin. So I think we're still growing very, very rapidly, and capital is coming into the space.
Well, some are arguing this is just a necessary cooling off after an overheated Q1. Is this actually just a healthy reset for Bitcoin?
It's a healthy reset. And, I think that people use Bitcoin to measure progress, and that's fair. But again, I would say that when you pull back, you get the opportunity for new investors to get in. We experienced some pushback when we were up 50, 60% in block, that we had moved too quickly. So now we're giving investors the opportunity to get a better price, and maybe that means a better upside.
But how much policy premium is left in crypto? We've had a year of regulatory and policy wins both in the US and abroad. Has the market moved on from that optimism?
Well, I think the regulatory environment is still very, very friendly. And it's really been a short period of time. I mean, July is when we got our first framework with the Genius Act. And then I think in sometime the first quarter, we're going to get the Clarity Act approved. And that just creates more of a platform, more tailwinds for blockchain, for investors to understand and be confident with the future. Money is pouring into AI and pouring into blockchain. We're talking trillions in the way of AI particularly, but I think blockchain, by the year 2030, we're talking about $1.5 trillion coming into blockchain.
Well, the leverage in these funds is pouring gasoline on Bitcoin swings. And now you have heavyweights like Tether stockpiling gold. Should investors see that as a warning sign?
Not a warning sign at all. I think people forget that blockchain, in the same way that ETFs provide access to investments, the blockchain is going to disrupt how people invest in the future. And I mean in a positive way. We've got Figure Technologies coming out with a tokenization of their stock in the first quarter next year. And that's going to bypass this little entity called DTC, which I think it's 1.5 or 1.8 quadrillion transactions go through DTC. I think when you think about ETFs, you think about transparency. You think about how things transfer easily. You think about lower cost. Well, to some degree, blockchain is like a digital ETF, and it's going to offer the opportunity for investors to invest in real estate, in different securities, in art, in sports gambling. So there's a lot of excitement around it.
Well, Dan, you've said that blockchain and crypto are separate, but won't its adoption always be constrained by speculation in the crypto space?
Going back to your question around leverage, I guess, when you leverage a volatile asset, you're going to create even more speculation and even more volatility. I think people need to size their risk appropriately and be prepared for volatility, because this is the opportunity. And I would say this is the opportunity in the future, and it's not going backwards, right? We're going forwards, and we're going to go forwards in an accelerated way. and they don't want to get shaken out when we see pullbacks.
That was Dan Weiskopf from Tidal Financial Group. Don't forget, you can watch more videos on Reuters.com.